Hello guys, this is Felipe from the Noob Trader. Sorry, I haven't done a video in a few days just because, again, been really busy of course, but then a few days ago I also got the second dose of the vaccine, knocked me out. But felt like I really had to do a video today now that I'm feeling a little better, and we also had the big CPI data come out, so haven't done a gold video in a while. So this gold video, I'm going to kind of cover my thoughts fundamentally on where we are at with gold, based off the NFP data from last week or the jobs data, and also now the CPI report that came out just about an hour and a half ago. Okay, so let's get started. So if you guys have been following my um, fundamental gold videos at all, where I give my thoughts, as you guys know, I've kind of been saying for a while now that I believe that any price for gold at 1750, 1760, or pretty much anything below 1800 really, but yeah, especially 1750, 1760 and below that, I just believe that as we're looking at the day chart now, fundamentally, um, in the short term, it made sense to be bullish on gold and to take bullish positions at these price ranges. And why did I say that? The reason is because fundamentally, doesn't matter what the technicals showed, even back here, right, when we were at 1740, retracing lower towards the 1720 level, where we obviously got the really strong bounce off the support range. But from a fundamental level, gold is still in the short term in a good place. Okay. Maybe medium term when the Fed seriously finally reacts. Okay. But who knows when that is? But when the Fed finally reacts to this crazy inflation, when the Fed finally reacts to the economy not recovering how they planned, when the Fed finally reacts, okay, to all the different economic hardships that both the American and frankly the global economy, but especially the American economy is suffering right now, um, when the Fed finally reacts and does something, right, like raise interest rates or whatever, then maybe, you know, in the medium term, you want to switch the stance a bit. But then if you're ultimately long-term bullish on gold, then it doesn't really matter. But my point is that in the short term, I said that it made sense to be bullish on gold simply because when these data releases come out that are going to be, you know, good for gold, whether that's, you know, high inflation numbers. And again, high inflation numbers don't mean necessarily good for gold at all. If anything, it's good for the dollar typically, but just given how the Fed's been reacting to high inflation lately, it is good for gold, okay? They're not going to do anything to fix the inflation. They're not going to raise interest rates, which is the standard way to do it, right? Based on economic theory. So if inflation's constantly high, and we've seen this now for fucking months, right? And again, why was anybody expecting something different here? And then on top of that, when we have jobs data like we saw with the NFP last week, when we've been constantly seeing lately with the initial jobless claims data that releases every Thursday, and just seeing, how many fewer jobs were created, how many more people are claiming or are claiming to be jobless, right? All these different types of things. When we see these poor jobs data reports on top of the high inflation numbers, right? It's not coming under control, okay? The inflation is so clearly not transitory at this point, it's almost ridiculous. It's almost ridiculous, right? But then with the economy still not recovering, the Fed is put in a really tough position from a fundamental standpoint, right? What are they going to do to fix this? Because they don't want to raise interest rates because so many people are going to get fucked, right? It's probably going to cause serious drops in the stock market. Lots of people are going to be losing money, right? At the same time, with the latest outbreaks of COVID and just generally what they've been doing with all their free money handouts, through the money that they were supplying previously, and then just people not want, like, why do people want to work right now? You have to fundamentally ask yourself that question too. And I think the Fed is failing to do this. Why would people want to work right now when the price of shit is getting so expensive? I mean, just look at the price of gas, for example. And then at the same time, it's not like wages are increasing at that kind of inflation rate, right? So we have to understand as gold investors or as gold traders or whatever you want to call it, right? Definitely more on the long term, right? That fundamentals, understanding fundamentals for this market makes a shit ton of sense, okay? It's just necessary if you're going to be playing, 4-hour time frames or the daily time frame, because when these things come out, or when these data points come out, if you don't have a good understanding of the economy, it doesn't matter what the technicals say, things are going to go against you. And that's why I've been saying for a long set of time, like 1720, 1740, 1760, these prices are good. And that's just what we've been seeing with the NFP data that came out, and now consequently the inflation numbers. Yes, initially, of course, you have to always remember that this is still a market. So people are going to take profits, which is what initially happened when the data came out. Spiked up, people were taking profits, shot back down, but then, buy orders were getting triggered again because ultimately the data that came out was still fundamentally good for gold, and now we've just smashed through 1780 like it's nothing. It's crazy to see the reaction here, right? So what was the data that actually came out? Well, if we go back to our favorite investing.com, let me close this fucking ad. We can see core CPI increased from the previous month, right? But more importantly, right, at least in my opinion, CPI year on year, we're still at this 5.4% level. The core CPI year on year, we're still at 4.0%. Guys, look at any economic theory book, right, about what should be a good inflation rate according to modern day kind of Keynesian style economics or whatever you want to fucking call it. Okay. 5.4% is insane. It's just ridiculously high. So you have this crazy price increases that are going on right now, and everybody can feel it, right? In the States, let alone the world, but especially in the States, everybody can feel it, feel the prices of shit going up, right? Then on top of that, you have jobs struggling. So the Fed are put in this situation where they know that they have to do something, right? When you look at the last previous Fed meeting, they talked about doing all the things that they need to be doing to slowly um, pull back all the money printing and all these things, which is ultimately causing this crazy inflation that we're seeing, right? On top of that, all the COVID and stuff. But at the same time, they can't do that because the economy is already suffering from a labor standpoint. And then on the top of that, people have taken so much risk in asset classes like stocks, like crypto, whatever it may be, that if they do something crazy to try and control this inflation, it's going to cause those things to plummet. So they're at an impasse here, right? And that's ultimately what we're seeing. So now every time that we're getting these fundamentally positive data reports for gold, okay, this ridiculously high inflation that the government doesn't want to handle, terrible jobs reports, right? And these job reports are happening frequently right now because even the initial jobless claims reports are terrible, and that's weekly, okay? So when you have all these different things, right? On top of that, we have, just the general COVID situation still, and it's all just still kind of fucked, right? This general global supply shortage going on, just all of these different fundamental factors here are just leading to gold ultimately having or showing bullish momentum when these data points are coming out. So yes, people are going to be taking profits, but if you're buying at reasonable prices, right, which for me, in my opinion, this range here between 1760 and the 1720 floor, this is just, it has proven consistently for quite some time now, right? All the way for multiple months now. If you're buying at this level, you're buying at the very low end of the market still. Okay, you're buying at the low end of the market, and ultimately, the risk to reward that you have being bullish on gold at those kind of prices, you're probably going to win out. You're probably going to win. Just think about it. Anytime that you had purchased at this region since all the way back in April, right? Since this double bottom, anytime that you've purchased within this region here, you're going to be up and you're going to have made a good amount of money on a short-term kind of, you know, swing trade position, right? Let alone for like long-term investment holding. I still think that this is a great price because no doubt in my mind that in the next years, we're going to be breaking the all-time high, etc. So, um, Yeah, I mean, you know, now we're seeing this crazy move here, okay, after this high inflation. Obviously, things don't just go up straight. We'll see if we can really get, I'm assuming at this point we're probably going to trek towards 1800 and and see a retest where we got pretty strongly rejected here before, right? I'm assuming we're probably going to retest that, which kind of, coincides here with the 200-day. I'm not saying that may necessarily happen today, but probably over the coming days. So we're going to have to see that. Um, let's see if we can really break through that. I'm not so sure, but again, even if we get rejected again and we go back down towards 1760 or 1750, don't forget, again, just look at the price history of the last months or so, right? And consider the fundamental situation where we're at right now in the economy. The next NFP that comes up, do you think it's going to be any better? I mean, what signs show you that it's going to be any better, or if, so much better where it's going to exceed forecasts like crazy? I just don't see it right now. I don't see it right now. Obviously, every time that there is, you know, terrible inflation reports for the US economy, it just keeps on putting more and more pressure on the Fed to do something about it. But with how poor job reports have been, I don't know. I still think that the Fed is more inclined to not do anything. It's in their favor to not do anything, just to, keep everyone kind of happy. I don't think that they have any reason to do anything right now. So even if at the next Fed meeting or when the next big Powell press conference is, yeah, he may address it. And yeah, it may lead to a short-term downturn if he mentions like, okay, we're going to really start tapering assets now. It could mean that. But again, like, do you really think that the price of gold is going to plummet below 1720 or this double bottom at 1690? I just I just I just don't believe it. I don't believe it given the fact that these data reports are just going to continue coming. Nothing suggests that this is going to slow down anytime soon. Okay, guys. So this is just my overall take on this. You can agree or disagree, but um, I just feel very strongly right now that, I mean, if gold goes back towards 1750 and below, and obviously you're managing any position that you're taking in a financially reasonable way, like the risk to reward is just really there right now in this current economic climate. Don't forget that, guys. Okay. So anyways, last thoughts. Let's see what happens as we approach 1800. Let's see if we get rejected. I'm sure we will get rejected a few times, but let's see if we can actually see a breakout and then potentially test this, like, this very, very, very strong resistance range where we've been rejected strongly 3 times, clearly 3 times on the day chart. If we break through 1800, that's where I really think we're probably going to end up going. Well, I mean, there is some resistance at 1810, but this would really be the next key resistance level. So let's see how it goes. But I hope you guys, every time that this happens, I hope you guys are taking advantage of this and learning from this, learning to understand the fundamentals of the market and how it affects gold, learning the fundamentals of the economy and how it affects the DXY and the dollar, and how this can help you become more confidently bullish or bearish on gold and trading gold. Okay, guys. Anyways, that's it for the video today. If you liked my thoughts on the inflation or CPI report that just came out, consider giving a like. If you have a question, leave a comment. Try and release a couple more videos, but I am going out to surf again soon, but I'll even try and do videos when I'm out there at the beach. I'll talk to you guys and see you on the next video.